5-minute tax guides from your 5-minute tax guy. Short lessons to help you navigate the treacherous, hazardous, and totally unpredictable U.S. federal tax code. Okay, I've got to get something off my chest right now before we go any further. Many of you have been telling me, 5-minute tax guy, how come your videos are 8, 9, 10 minutes long? I thought you were the 5-minute tax guy. Listen, when I say that a video is 5 minutes long, what I mean is it's between 5 and 10 minutes long. I thought everybody understood that. You can't explain the U.S. federal tax code in 5 minutes. The U.S. federal tax code is over 75,000 pages long. Take my word for it, I Googled it. And that was in 2014, where the new Tax Cuts and Jobs Act that Congress passed in December, effective for the 2018 tax year, I guesstimate that page count probably went up about 10,000 pages. By now it's probably about a jillion pages long. So if I take an extra 3, 4, or 5 minutes to try to explain it, I think that it's perfectly justified, don't you think? Well, that little rant added another minute to my video. Happy now? 2019 tax changes. In December of 2017, Congress passed the new Tax Cuts and Jobs Act, which dramatically changed many of the tax provisions that we, as individual taxpayers, are subject to when preparing and filing our individual tax returns. In this video, to help you prepare for the filing of your 2018 tax return, which you will file in 2019, I will be covering some of the most notable and relevant changes made by the TCJA. Itemized deductions. Some itemized deductions have been affected by the TCJA. State and local income taxes. The Schedule A deduction for state and local income taxes or property taxes is now limited to $10,000. This means that you can deduct state and local income taxes or sales tax up to $10,000. Or you can deduct real and personal property tax up to $10,000. Charitable contributions. Under prior law, a taxpayer's deductions for charitable contributions was limited to 50% of their adjusted gross income for the year. Any excess could be carried forward to subsequent years. The new law now allows contributions of up to 60% of AGI. I bet you're excited and relieved to hear that, right? I've always been chafed by that pesky 50% limitation to my charitable giving. Casualty and theft losses. Under the new TCJA, only those losses that occur in a federally declared disaster area will be deductible on Schedule A as an itemized deduction. Job and certain miscellaneous deductions. Remember that last category of deductions on the Schedule A that allowed you to claim mileage driven for your employer and for which you didn't get reimbursed? Also, any other expenses that you incurred which were related to your job? Those are gone beginning in 2018 and going forward. Also included in this category were tax preparation fees. Overall limitation on itemized deductions. The overall limitation on itemized deductions, sometimes referred to as the PEAS limitation, has been eliminated under the TCJA, so you can claim as much in itemized deductions as you want, and you won't be subject to that limitation. Moving expenses. In the past, employees have been able to deduct moving expenses related to employment as an adjustment to income, and have been able to exclude qualified moving expense reimbursement from an employer. For 2018 and going forward, moving expenses are no longer deductible, and you can no longer exclude from income any reimbursement received from your employer. Active duty military personnel may still deduct qualified moving expenses connected with a permanent change of station. Tax rates. Income tax rates will be lower under the TCJA, but don't get too excited. The decreases are fairly modest, but hey, every little bit helps. Alternative minimum tax, or AMT. The AMT threshold amounts have increased significantly, which will mean that very few households will be subject to the AMT under the TCJA. Here are the AMT threshold amounts for 2017 and prior, and the AMT exemption amounts under the new tax law. Notice that under these new rules, a taxpayer married filing joint will not be subject to AMT until their AGI reaches $1 million. The Qualified Business Income Deduction. There is a new deduction under the new law for qualified business income, or QBI. This deduction is sometimes referred to as a Section 199A deduction because of the applicable IRS code section. This new provision of the TCJA has received quite a lot of buzz among taxpayers who have their own businesses. This is a deduction of up to 20% of the taxpayer's QBI from self-employment, Schedule C sole proprietorship, a partnership, or an S corporation. QBI is essentially income generated from the business, but not investment income, minus expenses, and can be used to reduce a taxpayer's taxable income. Unfortunately, this deduction does not apply to those taxpayers in certain service-related businesses referred to as a specified service, trade, or business. Below is the IRS's definition of a SSTB. Specified trade or business, which includes a trade or business involving the performance of services in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, investing, and investment management, trading, dealing in certain assets, or any trade or business where the principal asset is the reputation or skill of one or more of its employees. This exception only applies if a taxpayer's taxable income exceeds $315,000 for a married couple filing a joint return, or $157,500 for all other taxpayers. There are numerous other changes under the TCJA, but I've already gone way over time, and we've covered the ones that most taxpayers are likely to be affected by. The long and short of it is that most taxpayers will be positively affected by the new law, while a few, probably higher income individuals and families, will be negatively affected. We're likely to continue to see a lot of change in tax in the coming years, so stay tuned to keep on top of it all. As someone once said, actually I think it was me that said it, the only thing constant in tax law is change. Remember those 75,000 pages I mentioned at the beginning of this presentation? I think there's been another 5,000 pages added since you started watching this video. For more great 5-minute tax guides, check out the other videos in my 5-minute tax guide video series. See the list in the description below this video. That's it for part 2 of the changes under the new tax law, the Tax Cuts and Jobs Act. To see part 1, click the link in the upper right corner of this video.